There was a time when money had a face. It bore kings, presidents, and promises, symbols of trust printed on paper, each note guaranteed by the authority of a nation. For centuries, that system defined order. States controlled issuance, banks controlled access, and citizens trusted the illusion of stability. But in the 21st century, that illusion shattered. Money no longer lives in vaults or printing presses. It flows through cables, satellites, and servers. It's mined, minted, and programmed, without borders, without permission. As inflation hits record highs, debt spirals out of control, and traditional systems buckle under their own weight. A new financial architecture is rising, invisible, distributed, global. Governments are waking up to a dangerous truth. The monopoly on money creation, the cornerstone of power, is slipping away. This is where politics meets code, where finance becomes geopolitics written in algorithms. Welcome to the age of crypto nations, where power is no longer seized by armies, but by protocols. And whoever governs the blockchain governs the world. Money has always been a story of trust. Not trust in people, but trust in institutions. In central banks, in governments, in the fiction of permanence. Yet every crisis rewrites that story. In 2008, Lehman Brothers collapsed, exposing the fragility of the system. In 2020, a global pandemic triggered mass money printing, over $10 trillion injected into economies overnight. And amid that chaos, a name surfaced on an obscure mailing list: Satoshi Nakamoto. A document appeared, the Bitcoin white paper. It didn't promise reform. It offered revolution. A payment network without trust, intermediaries, or permission. Bitcoin was not just code. It was a political statement. And what began as a cypherpunk dream soon became the greatest economic experiment of the 21st century. In September 2021, El Salvador made history. President Nayib Bukele, wearing his signature backward cap, announced to the United Nations, "Bitcoin gives us freedom." The country adopted Bitcoin as legal tender, the first in the world to do so. In the coastal town of El Zonte, a local initiative called Bitcoin Beach had already been testing crypto payments for years, turning fishermen into fintech users overnight. Now, an entire nation followed suit. The Chivo wallet was launched. The government mined Bitcoin using geothermal energy from volcanoes. And the world's first Bitcoin city was announced. A circular metropolis powered entirely by renewable energy. The International Monetary Fund and World Bank criticized the move. Protests filled the streets of San Salvador. Yet tourism doubled, remittance fees dropped, and the country's tech sector began to bloom. Inspired by this, the Central African Republic followed, adopting Bitcoin to break dependence on the CFA franc, a currency still tied to France. For the Global South, it wasn't just about money. It was about sovereignty. A declaration that economic power no longer flows only through Washington or Brussels, but through code. While smaller nations rebel, economic giants choose another strategy: integration. Switzerland became a pioneer. The city of Zug, now known as Crypto Valley, hosts companies like Ethereum Foundation, Cardano, and Tezos. Here, taxes can be paid in Bitcoin, and the government legally recognizes blockchain-based shares. In Singapore, regulators built the Project Guardian framework, a sandbox for tokenizing assets like government bonds and carbon credits. Financial giants like JP Morgan, DBS Bank, and Temasek collaborate with DeFi protocols to bridge traditional finance with the blockchain. In the United Arab Emirates, Dubai launched the Virtual Assets Regulatory Authority, VARA, issuing licenses to major exchanges like Binance, OKX, and Bybit. Abu Dhabi followed with its own free zone for blockchain startups, attracting companies fleeing US uncertainty. The message is unmistakable. Innovation gravitates where clarity exists. In this new era, regulation is the new soft power, and nations compete not with armies, but with legal frameworks. While the US continues to debate whether Ethereum is a security, Europe quietly executes its long-term plan. In 2023, the European Union approved MiCA, the Markets in Crypto Assets Regulation, the world's first comprehensive crypto law. It defines stablecoins, sets rules for exchanges, and creates a unified license across all EU states. Banks like Santander, Societe Generale, and Intesa Sanpaolo have since launched pilot programs for tokenized bonds and digital securities. France became home to Europe's first registered digital asset bank, SG Forge, which issued the EUR coinvertible stablecoin on Ethereum. Meanwhile, Italy's Banca Sella began offering retail Bitcoin custody, and Germany's Deutsche Bank applied for a digital asset custody license. Europe's strategy is deliberate, not to destroy the old system, but to merge it with the new, on its own terms. As the United States wages legal battles, Brussels quietly wins the regulatory war. Beyond the big powers lies a network of digital outposts, small nations turning agility into advantage. Liechtenstein passed the Blockchain Act, one of the world's first comprehensive crypto laws. Bermuda hosts Circle's global headquarters, the company behind the USDC stablecoin. The Cayman Islands became the base for countless DAOs and investment funds, while Mauritius developed a dedicated crypto licensing framework. Even the Seychelles, home to exchanges like BitMX and OKX, embraced blockchain to modernize its banking sector. Critics call it regulatory arbitrage. Supporters call it economic evolution. In these micronations, legislation itself is the main export. They sell clarity, speed, and neutrality, commodities that global capital desperately seeks. Not every government sees decentralization as progress. China, after dominating global Bitcoin mining until 2021, banned it overnight, forcing miners to flee to Kazakhstan and Texas. Yet, the same year, it rolled out the digital yuan, a state-controlled currency now used in cities like Shenzhen and Suzhou. Over 260 million wallets have been opened, allowing programmable payments and expiration dates on money itself. Turkey, amid record inflation exceeding 70%, restricts crypto payments, yet relies on Tether, USDT, as citizens seek refuge from a collapsing lira. In India, A 30% tax on crypto trading has driven millions of young traders underground or abroad. Meanwhile, in the United States, the regulatory landscape is fractured. The SEC's lawsuits against Ripple, Coinbase, and Binance sparked a global debate on whether innovation can survive Washington's gridlock. As American companies leave, Hong Kong, Dubai, and London are welcoming them with open arms. The ideological divide is clear. Some build walls, others build on-ramps. Beneath the noise of markets lies a deeper struggle: the redistribution of monetary power. Blockchain undermines a system that's existed since Bretton Woods, 1944, where the US dollar became the world's default currency. Today, Russia and Iran test cross-border payments using stablecoins to bypass sanctions. Brazil and China have launched settlements in local currencies, reducing dollar exposure. The BRICS bloc is exploring a shared digital currency. And the IMF has introduced XC, a cross-border digital asset for settlement between central banks. Every blockchain transaction challenges the monopoly of centralized finance. Every decentralized protocol weakens the control of traditional gatekeepers. Power is no longer measured in armies or GDP, but in hash rate, liquidity, and code adoption. As nations digitize their currencies, from the digital euro to Nigeria's e-naira and Brazil's drex, a global experiment unfolds. Can programmable money coexist with personal freedom? The answer will define geopolitics for the next century. By 2025, the world's financial map has been redrawn. Singapore has become Asia's regulatory leader, hosting Ripple's Asia HQ and the annual Token 2049 conference. Zug remains Europe's blockchain haven, home to Ethereum, Cardano, and the Crypto Valley Association. Dubai hosts Binance, Bybit, and CoinW, and launches the world's first Web3 university campus. El Salvador mines Bitcoin with volcanoes and issues volcano bonds on the Bitfinex securities platform. Brussels, through MiCA, now influences global compliance standards. New hotspots appear monthly. Lugano's Plan B initiative, where McDonald's accepts Bitcoin and USDT. Lisbon's Web Summit, the new mecca of European crypto innovation. Tbilisi, Tallinn, Seoul, and Hong Kong racing to build digital identities and blockchain-based governance. The centers of financial power are no longer physical. They are networks, overlapping, evolving, borderless. History is the story of shifting power. Steam gave power to empires. Electricity gave it to industries. The internet gave it to platforms. Blockchain returns it to no one, or perhaps to everyone. Money has become code, a programmable language of value. Trust has become verification. Property has become a private key. And the greatest competition of our time is not between East and West, but between the old architecture of control and the new architecture of consensus. The nations that learn to govern this code without suffocating it will not only control economies, they'll control the flow of trust in the 21st century. The story of money is being rewritten, block by block. If you want to understand where the world is heading and how crypto nations are redefining politics, finance, and freedom, follow Spazio Crypto Chronicles. Subscribe to the channel, activate the bell, and visit spaziocrypto.com for multilingual reports, interviews, and documentaries.